Well, good morning. Tony Virtue speaking, Virtue and Partners with our regular monthly update. And well, we're through year end, so a good chance to have a look at the scoreboard. And again, a pretty good year, I think, for most investors. As you look at the graph, we've been really now 10 years after that GFC, which still gives us all nightmares. So we can see that recovery coming, and really fueled by very, very low interest rates. Basically, particularly the Americans just sort of gave money away, and you can see that reflecting in the results that have come through. Question, of course, becomes, well, will there be a correction down at some stage? A few of the managers now going quite public about this. Generally, it's probably better to stick to your asset allocation and ride these things out. Whenever you sell an asset, you then have another decision to make, which is when to buy back in again, which is harder than it seems. Technology is driving what is happening out there. You're getting more bang for your buck in many ways of the assets that you own. Part of that will mean low inflation for a very, very long time. That is due to replacements. So actually replacing products and services with more efficient products and services at a lower price. Now you see that reflecting now in Australian interest rates, which again are going nowhere. Now on stock specific matters, I have spoken that this is a good market for mergers and acquisitions. The media laws have been loosened, and Channel 9 have made a quote friendly bid for Fairfax. It's sort of 51.49, if that makes sense. That will allow the combined business to compete more against the Facebooks, the Googles. These businesses make their money out of advertisers, not out of you and me. And the practical effect is they've lost a lot of their revenue to online money going to the Googles and Facebooks. So what's interesting is the real value of Fairfax was their domain business, which competes against REA. This is online real estate, as opposed to traditionally the Sydney Morning Herald, etc. So that's the world that we're living in at the moment. Interesting, in the last few days, Facebook's stock actually fell by 20%, so on one day. So it does show the danger of an individual stock-specific risk. We remain very heavily indebted as a country, as many of us are aware. And again, that is going to be quite a handbrake on any interest rate movements. At the same time, the US have lifted their rates on multiple occasions. The natural expectation of that will be for the Australian dollar to fall from its current position. So those of you planning to go overseas, hurry up, because it might get a bit more expensive in the foreseeable future. One of the effects of the indebtedness has been APRA moving in to tighten up lending standards, something we're seeing here on a day-to-day basis. Now, the intent behind this was to make sure people could pay their mortgages back. And as part of that, just to do some proper expense assessments. Historically, there have been a bit of shortcuts, if I can say that, where everyone was treated pretty much the same, whether they had 3 kids at private school and a large personal debt on their mortgage, or whether they were unencumbered. Now, for a while, that's going to take a little bit of sorting out. Longer term, it should mean that underwriting is more prescriptive, more accurate, and that should lead to less speculation in the market and less defaults at a later stage, where people basically have really just betted too aggressively on the property market going up without the fundamentals being there. So if you're looking to get a loan, it will be harder than it has been in the past, not impossible. And for those of you who are bankable, this will sort itself out over time, but in the immediate, we need a bit more time to get your mortgages settled there. So look, I'm pretty optimistic for the future as it sits. It's very easy to cry wolf and look for solutions for problems that aren't there. I think some of the inquiries at the moment probably aren't overly helpful. All they're really doing is damaging confidence. That's not to say we should condone poor behaviour, but we need to get that in context with the vast majority of things going right. We are a blessed country. We're the wealthiest country in the world per capita now, and we have much to be grateful for. So I look forward to seeing many of you over the next few months and continuing our journey together. Best wishes, Tony.